Today, we'll be talking about stock zone levels or price maps. Stock zone levels are decision zones where market engagement is expected to take place. It is a predefined level based on volume profile, price action, prior order flow, and statistical expectancies. Just because there's a stock zone level, it doesn't necessarily mean that a trade will be taken in this area. It is also not a prediction of what is going to happen in the future. Stock zone levels are important because it is a price map of where we believe price might have a reaction. It is a visual reminder of where we should be considering to engage in the markets. It helps keep the trader focused and reduce FOMO. An example, when price is trading between two stock zones, I know there is nothing to do, or that I also have no edge. It helps practice trading level to level rather than in the moment. So if price pushes through a stock zone, I am looking for the next stock zone for potential targets or reactions. You're probably wondering why zones and not levels. Prices aren't precise. Zones reflect that and are more flexible. When we are building our stock zones or building our price map, we want to make sure that we are placing the stock zones where price had a reaction. Typically, we do put them on high of days and low of days, which you can see here. We marked this area up. You can see there's a strong reaction. And down here, you can see prices come down, buyers picked it up multiple times. So we put a stock zone here. As you push later into the overnight session, you can see that price also rejected this area when it pulled back into the stock zone. Sellers came in and pushed price back down. Now you're probably looking at this area right here where there are multiple wicks showing a reaction. Well, this is also the overnight VPOC. It is already highlighted, so it's kind of obvious that there is a reaction here and there's no need to put a stock zone here. You don't want to overload your charts with stock zones. You want them to be meaningful. Another indication is down here where you will see the low of day. The low of day for this RTH session is not marked with a stock zone, and that's because it was a gap day, and it is also marked here with a gap. So you don't need to put a stock zone there because it's an obvious indicator with this gap. And then here we have a very strong reaction off this swing low, which is also tested in the overnight session and rejected quite meaningfully. When in doubt, don't put a stock zone. You want to make sure your levels are at meaningful areas. And you don't want to overload your charts with stock zones because you could find a reason to put a stock zone anywhere. Now, if you want to learn more, you can join CT. Our memberships include stock zones for several products, including the ES, the NQ, and Crude. It's available for multiple platforms, including Investor RT, Sierra Chart, NinjaTrader, MotiveWave, Edge Pro X, and Bookmap. If you join our Trade Right program, you can learn more on building or creating your own price map or stock zones. Please click on convergenttrading.com/pricing in the info below to look at our subscription products. Thank you. Hope you enjoyed this 2-minute tip.